The Fed hikes rates 75 basis points, just like we expected, like pretty much everybody expected, with unanimous consent about the rate hike. Markets are off to the races. So what in the world is going on? Why are the markets rallying on a 75-point basis hike? A couple of reasons. One, earnings have been coming in okay. We've seen a couple of, Microsoft and Alphabet rally on poor earnings, but good, strong guidance, which is really interesting. They, didn't meet earnings and said, but hey, we're going to have a great next quarter. So stocks are off to the races. It's kind of funny how these stocks are reacting so volatilely to headline news and projected future potential pro forma earnings that we hopefully hit, and stocks rally. But today's a big volatile day. Dow is up 1.4 right now, S&P up 2.5, NASDAQ up almost 4%, 3.98. So nice little bounce for the NASDAQ. And of course, Bitcoin is following along with the bounce. Bitcoin is up. Let's see, on today alone, let's see, about 6 or 7%. Yeah, almost 8% right now just on the day. And the interesting thing is going to be, will this continue? And why such an aggressive bounce? Because Powell just said that if things continue, that the Fed could potentially slow down rate hikes, and he did remove any forward guidance. But he said recent indicators of spending and production have softened. The rate of increases are having their intended effect. We are just not sure what the price is going to be. And he also said that if the Fed policy continues to be effective and continues to work, that they could see policy slowing. And as the stance of monetary policy tightens further, it is likely will become appropriate to slow the pace of increases while we assess how our cumulative policy adjustments are affecting the economy and inflation. So that's the big statement right there that markets jumped on. As the stance of monetary policy tightens further, it will likely become appropriate to slow the pace of increases. So that's the Fed pivot everybody's been wanting. So he came out to try to soften the blow a little bit on this rate hike by saying, if our policies are working, we can slow the pace of hiking. And we're not going to give future guidance because things are just too crazy right now. So really interesting statements out of Powell. The market's going to pick it apart. And of course, right now it's loving what it's hearing. So let's take a look at what to expect now, because we have a pattern of what happened last time. So the markets did drop a little bit into the Fed rate hike, which it did last time, right? So last time we had this big drop. And then on the 15th of June, where's it at? Right here. On the 15th of June, we had a green day when the Fed actually raised the rates. Then we dropped, the market dropped another, this is Bitcoin, 20% the next couple of days after that rate hike. So the close was here. It wicked down to that low of 17.5, 17.6, which was 21%, almost 22%. The 3 days after that Fed rate hike. So if the market settles in anywhere around where we're at right now, and let's say it repeated, because it's up, it's excited right now off of the rate hike and the Fed potentially pivoting down the road, but then the hangover sets in and says, wait a minute, the Fed raised rates and they said that if policy is effective, then we will be able to slow down. But let's just look at that. 20% would put you at 22%, 2022 puts you back down, testing this low again, which I do fully believe we're going to test this low again to see if it will hold before this is put in as more of a longer term base. And we do have some more earnings to get through today with Apple, Facebook reporting later. It'll be interesting to see. There's speculation that Facebook might have its first negative earnings report ever in its history. So we'll just have to see how that shakes out. Let's look at traditional markets. We had the same kind of thing right here. The 15th had a green day, then about a 5 or 6% drop in the Dow Jones after the Fed hike, 3% there. NASDAQ, let me see, there's the 15th right there. NASDAQ dropped about 4%. So it was pretty mild. And then we were off to the races from there. And this bear market rally could continue. but potentially we could be getting another little bit of a downward action here over the next couple of days after the market digests what Powell said, the interest rate hike and things like that. So today is a nice, fun day for the markets. Nice green day, good little bounce, about a 10% bounce overall in Bitcoin on the day. Let's take a look at that and some of the altcoins as well. Yeah, about 8% on Bitcoin. Ethereum, nice little bounce out of Ethereum overall on the day. Let's see what Ethereum's probably tracking, 11%. Avalanche, Sol, Matic, Cardano. So everything's pretty much following through. The interesting thing too, obviously, is the dollar is down on all this. Oil is continuing its rebound for the day. Gold is up a little bit. Silver is up a little bit. Those were taking a beating over the last few days. So very mild drop into the news today, but it was still overall from the peak, dropped about 15% into today's news. So that wasn't quite as bad as last time, pricing all of this in. So we'll just have to see what the next couple of days bring and what the close for today looks like. This is Bitcoin on the hourly here, as it's continuing to just kind of unwind all of this move into the Fed rate hike the last couple of days. So as I always say, you want to watch the momentum in the close to see what investors are really thinking. Watch aftermarket when Facebook, Apple, a couple other companies report after hours today. That'll be interesting to see what that looks like. And then, of course, the next 2 days closing the week out will be really interesting to watch. Hopefully we can hold on to this rally, see a little bit more upside before we continue on into this bear market action that we're dealing with. But if inflation can come down, if that can get put and placed under control with the Fed's policies, and we can avoid a deep recession, then markets might be able to put a base in here like we've been looking for and talking about and continue on from there. And we can flip bullish on the Fed backing off, inflation coming down. But make no mistake, they have got to get inflation down. So we will have to continue to monitor that to see what the Fed and what their reaction is going to look like. We have GDP coming out. Expectations are that it's going to be negative. But probably not too bad, maybe -1% or something like that. Technical recession, but of course, it's not going to meet a traditional definition of recessionary environment, with job loss, companies closing, things like that. So today was a good day. I hope you got a piece of that action, and I will see you on the next video.